Hello, or welcome to our YouTube channel. Today we're going to be talking about the Finance Act 2023, May 28th this year, and that was the eve of the president's departure from the office. He signed into law the groundbreaking Finance Act, long expected, and it's no longer news that almost every appropriation bill comes with a finance bill. We have the one 2021, 2022, and it basically sets out how the budget will be implemented. Now, May 28th, the president signed into law the finance bill, which is now the Finance Act 2023. We're not going to be talking about everything in the Finance Act. It made lots of amendments to different sections and different sections of the different existing tax laws, the Stamp Duties Act, the Capital Gain Tax, and a number of other laws. We are specifically going to be dwelling on Section 2 of the Finance Act. Now, the Act introduces a series of tax reforms aimed at modernizing the country's fiscal framework. Now, among its provision is the introduction of a 10% tax on gains from the disposal of digital assets. And of course, that includes cryptocurrencies. Now, this signifies Nigeria's recognition of the growing influence and economic potential of digital assets, while ensuring that the tax system keeps pace with the evolving financial landscape. Now, what exactly does Section 2 of the Finance Act 2023 say? That act, for context, I'm just going to read it out. So it says, Section 3A of the Capital Gains Tax Act is amended by inserting the word debt. By inserting after the word debt, the words digital asset. Now, to have a proper understanding of this, I'll refer you to Section 3A of the Capital Gains Tax Act. So the only addition here to Section 3A of the Capital Gains Tax Act is the word digital asset. So let's read Section 3A of the Capital Gains Tax Act to have a clear understanding, a fuller understanding of what that section now looks like. So Section 3 says, subject to any exceptions provided by this Act, all forms of property shall be assets for the purposes of this Act, whether situated in Nigeria or not, including A, options, debts, and incorporeal property generally. Now, with the amendment, after debt, you now have digital assets. So it will now read A, options, debts, digital assets, and incorporeal property generally. All of these are taxed at 10%. So that means for disposals of digital assets, capital gains tax applicable is 10%. The big question is, what exactly are digital assets? Unfortunately, the Act does not define digital assets. When it comes to digital assets, cryptocurrencies, and other types of digital assets, I think the Nigerian jurisdiction is still very nascent in that regard, right? Still very nascent. So the Finance Act did not define digital asset, but generally, digital assets would mean anything that is created and stored digitally, has value and ownership, and is discoverable and uniquely identifiable. That's the definition of digital assets. It includes digital currencies, cryptocurrencies, even photographies, photographs and slides. Your PowerPoint slides can even be called digital assets. So that's the general definition of digital assets. In view of the fact that the Finance Act does not define digital assets, the Capital Gain Tax Act does not define digital assets, we may now look at other jurisdictions and have a comparative analysis. In India, something similar happened, just like what we have now in Nigeria. In India, Section 3 of the Finance Act of 2022 inserts a new clause 47A to Section 2 of the Income Tax Act of 1961, Now, the clause defines virtual digital assets. Remember, in Nigeria, under the Nigerian Finance Act, what we have is digital assets. Under the Indian Act, what we have is virtual digital assets. And interestingly, the Indian Act defines virtual digital assets, whereas the Nigerian Act does not define digital assets. But let's take a cue or a clue from the Indian Act. In Indian, virtual digital asset means A, any information or code or number or token which does fall under an Indian currency or foreign currency generated through cryptographic means or otherwise by whatever name called. The objective is to provide a digital representation of value exchanged with or without consideration, involving promise or representation of having inherent value, or functions as a store of value or a unit of account, including its use in any financial transaction or investment. This is not limited to investment scheme and can be transferred, stored, or traded electronically. If you look at this definition carefully, it captures cryptocurrencies. So you have Ethereum, you have Bitcoin, you have Zuga coin, you have others. B, non-fungible tokens. So even NFTs is defined as part of virtual digital assets in India. Non-fungible tokens or any other token or of similar nature and properties with whatever name it is referred to. C, central government will be reserving the rights to add more technologies into virtual digital assets by notification in the official gazette. It now goes further to say, under the Act, income from virtual digital assets are taxed at 30%. So in India, taxation of virtual digital assets is at 30%. In Nigeria, taxation of digital assets is 10% currently. But in Nigeria, digital asset is not defined, and I think that's going to be an issue when it comes to implementation. And one even wonders how the FRS intends to implement this. Is it going to collect those taxes in cryptocurrency, in digital asset forms, or is it going to convert it to Naira, or expect the taxpayer to convert it to Naira and remit in the Naira denomination? So those are questions that will call for answer when it comes to implementation of this provision. It is also very interesting to note that in Nigeria, there's a CBN circular which prohibits banks from allowing transactions in cryptocurrencies. Now the act is now saying, the Finance Act is saying, you tax income from disposals of cryptocurrencies, from disposals of digital assets. But it's an extant CBN circular which prohibits banks from allowing transactions in cryptocurrency. To put it in context, the circular is dated February 5th of 2020 in the year 2021. Now, in that letter, the CBN issued a directive to deposit money banks, non-bank financial institutions, and other financial institutions. The letter reads, the Central Bank of Nigeria's CBN circular of January 12, 2017, reference FPR DIR GEN CIR 06010, which cautioned deposit money banks, non-bank financial institutions, other financial institutions, and members of the public on the risk associated with transactions in cryptocurrency refers. Further to earlier regulatory directives on the subject, the bank hereby wishes to remind regulated institutions that dealing in cryptocurrencies or facilitating payment of cryptocurrency exchanges is prohibited. Accordingly, all DMBs, NBFIs, and OFIs are directed to identify persons and or entities transacting in or operating cryptocurrency exchanges within their system and ensure that such accounts are closed immediately. Please note that breaches of this directive will attract severe regulatory sanctions. The letter is with immediate effect What that means is from the 5th of February 2021, banks are not allowed to conduct transactions on cryptocurrency, which forms part of the digital asset that is now going to be taxed at 10%. Whilst one would say this innovation introduced by Section 2 of the Finance Act, it's a very good one, but there are lots of loopholes and lots of issues that still needs to be addressed. So for example, like I identified earlier, the issue of the definition of digital assets. I would recommend ordinarily that Nigeria adopts the definition under the Indian Finance Act of 2022 and makes it and the Nigerian law should be amended to make it very clear and to ensure that there's no ambiguity in the whole process of implementation. Make it very clear as to what comprises digital assets. Given, based on general knowledge, cryptocurrencies and all other digital monies of that nature would ordinarily comprise digital assets, and one would want to think that that's what the draftsman had in mind, because lots of transactions still go on with cryptocurrencies in Nigeria. It's important to note that the CBN did not ban cryptocurrency in that sense. It only restrained or banned banks from allowing transactions in cryptocurrency under their bank. So that's basically what happened. So people still transact using cryptocurrency in Nigeria, and it is not an offense to do so. You see, the Finance Act has now said that transactions in cryptocurrency, disposals of cryptocurrency, will be taxed at 10%. How will this provision be implemented? Those are key issues. It's good to see how the implementation will go as events unfold. Like I said earlier in the discussion, one of the recommendations I would make is for the act to be amended to have a clear definition of digital assets. That's one. Two, there should be a policy statement either from the FRS or the Ministry of Finance as to how it intends to tax the disposals of digital assets. Is the tax going to be paid digitally or in the form of that digital asset? For example, if I sell 1 Bitcoin to someone who wants to buy in the cryptocurrency exchange, am I going to remit 10% in Bitcoin, or I'm going to convert it to the Naira equivalent and remit 10% of that value? So these and more are issues that should be sorted out. Don't forget to like this video and also drop your comments and questions. We're open to learning more and to knowing more about this concept. If you have a question, you can drop your question. Also, don't forget to share for those who may also want to learn from this discussion.